Now, there are three methods. There are three methods in which costing with respect to whether or not we are adhering to a standard budget is calculated. There are three methods of doing this. The first method is referred to as actual costing. The second method is referred to as normal costing. And the third method is referred to as standard costing. Now, the first method that we are going to touch upon in our discussion is that of actual costing. Now, what is actual costing? Actual costing is the actual, I would say, performance data. Needless to say, actual performance data will be based on actual performance of the reporting period. Needless to say that actual performance of the reporting period will be achieved, or you will get a download of it when the reporting period is over. You will not get it before that. It will be simultaneously there. It will be simultaneously there. So obvious that it is accurate. It is accurate. Why? Because it is the reality. It is accurate because it is the reality. Next, it is used, or I would say that it is used only after the manufacturing cycle is done. So this can be done. This data can be used or procured only after your manufacturing cycle. Only after your manufacturing cycle is completed. It cannot happen before that. Please understand this concept thoroughly. It cannot happen before that. Why it cannot happen before that? It cannot happen before that because it is based on actual numbers, guys. Actual numbers will be available after the manufacturing cycle is over. How can you get it in the midst of it or before it? What you will get before it is your static budget. The static budget has to be revised for the actual performances. But actual costing is your actual numbers. In this, there are three items that you are going to calculate. The first item that you will calculate is direct material. The second item you will calculate is direct labor. And the third item that you are calculating are going to be overheads. What are the three items we are looking at? Direct material, then we are looking at direct labor, and then we are looking at overheads. What is direct material? Direct material is equal to actual quantity multiplied by actual price. Direct labor is equal to actual hour multiplied by actual rate. And overhead is equal to actual usage multiplied by, it is actual usage multiplied by actual rate. Multiplied by your actual rate. Please be careful about that. Please be careful about that. Right? Right? Are you with me on that? 100%. Give me a thumbs up if you are. I request that whoever has joined in, use your apex numbers the way I've asked you to. Please use your apex numbers the way I've asked you to, because I need to keep my face on the screen. And while those apex numbers are not there, I can't reflect mine. Please be careful of that. Next, I come to normal costing. What is normal costing? Normal costing takes into consideration actual data for direct material and direct labor. It takes into consideration what? Direct material and direct labor actual data. Now we have to take into consideration normal cost for overheads. What do we have to take into consideration? We have to take into consideration normal cost for overheads. I hope you all are with me when I say that. We have to take into consideration normal cost for overheads. Normal cost for overheads. Here we will take into consideration two items. The first item that I have to take into consideration are whatever is the budgeted variable overheads, the amount of that, it will be divided by whatever is the variable overheads cost driver. Next, I will take into consideration whatever are the budgeted fixed overheads by taking into consideration fixed overheads cost driver. I will have to arrive upon a predetermined overhead rate. Predetermined overhead rate is nothing but a budgeted rate. It is a budgeted rate. Why? Because it is predetermined. So this will be total budgeted overheads divided by budgeted volume of activity. Divided by what? Budgeted volume of activity. Then I take into consideration standard costing. Then I take into consideration what? Standard costing. Standard costing is going to be based on all standard data only. All standard data only. This will be a flexible budget. This will be a flexible budget which will take into consideration standard rates for everything. Here, direct material will be standard quantity multiplied by standard price. For standard quantity, how will I arrive upon standard quantity? I will revise the actual performance based on standards available with me. Direct labor similarly is going to be standard hours multiplied by standard rate, and standard allocation basis multiplied by standard rate will give me my overheads. This right here becomes your universe of actual costing, normal costing, and standard costing, which are important concepts. Unfortunately, missed out in some publications. Fortunately, very decently covered in some publications. We have taken the best of everything and we have created a chart here for actual, normal, and standard costing. Now, this is a crash course batch. This is a crash course batch. Since this is a crash course batch, what we have to take into consideration? Since this is a crash course batch, is that we have to apply this for sum solving. So my first request to one of you is to take a screenshot. Please tell me immediately when the screenshot is taken. Please tell me immediately when the screenshot is taken. Is it taken? Is it taken? Is the screenshot taken, please?
Yes, sir.
Okay. Right. Now that we have gotten this chart in place, what is it that we need to do? We need to have a numerical case study that allows us to apply this everywhere. Now, let us see what happens. As you are aware that the company always begins its journey by having a standard. So there is going to be a standard cost budget. There is going to be a standard cost budget that is going to be available. What are you going to have? You are going to have a standard cost budget. You will always have a standard cost budget. So this standard cost budget says direct materials required are 2 per unit at the rate of $5 per unit. Second, they are saying that direct labor will be 3 hours per unit at the rate of $7 per hour. $7 per hour. Next, you have got variable overheads at the rate of $2 per hour on your direct labor hours. Okay. Your fixed overheads are $3 per hour on your direct labor hours. First of all, understand what is the meaning of on direct labor hours. See, it is a very, very simple concept or a simple common logic, common sense of sorts, that overheads are incurred so long as manufacturing continues. Once the manufacturing stops, certain overheads will no longer be incurred. First point. Second point, overheads have to be recovered from the number of units that you are manufacturing. As long as the labor is in action, overheads have to be incurred. Without that, the manufacturing cannot happen. In a traditional school of costing, it is always said that, in a traditional school of costing, it is always said that where there is no logical basis, where the organization does not have an advanced or a clearer vision by the use of activity-based costing, they are going to allocate their overheads on the basis of direct labor hours or machine hours. It's as clear as that. Here, we are going on the basis of direct labor hours, because obviously the data of machine hours is not given to us in the question. Please understand that very, very carefully. Second, this was what you budgeted, but this is what actually happened. So this is your actual performance. Your actual performance is God's honest truth. It's the gospel truth. It is the reality. It is the reality. Here you have 12,000 units produced. Here you have 12,000 units produced. Direct material that you have taken is 1.9 per unit, at the rate of $5.20 per unit. Direct labor that you required is 3.5 hours per unit at the rate of $6.50 per hour. Variable overheads, you will not have a rate. It is actually what you have incurred, and you have incurred 65,000. Then I come to fixed overheads. Fixed overheads, I have incurred a fixed overhead of 100,000. I have incurred a fixed overhead of 100,000. Now they are asking you in your exams, on the basis of actual costing, what are your material cost, labor cost, overheads respectively. So what are you supposed to do in this question? The question's objective for you is, number one, calculate direct material, direct labor, variable overheads, fixed overheads as per actual costing. Second, calculate direct material, direct labor, variable overhead, fixed overhead as per normal costing. Third, as per standard costing. These are the three items that you are required to take care of. So first, I will get into actual costing. Actual costing is nothing but the actual cost incurred. I need, for direct materials, 1.9 units of material per unit for 12,000 units at the rate of 5 per unit. So if I calculate this, this will come to $118,560. Direct labor, I require 3.5 hours per unit for 12,000 units at the rate of $6.5 per hour. So this will be $2,73,000. Then I require to know what is my variable overhead. It's a no-brainer. It is what I've actually incurred. It is $65,000. It is a no-brainer. It is what I've actually incurred, which is $65,000. And then I come to my fixed overheads. What I've actually incurred, which is nothing but $100,000. Yes, there's a raised hand. Please ask your query.
Sir,
I'm sorry.
direct it is 5.2.
It is 5.2. Oh, I beg your pardon. Yes, I made an error in writing. You are absolutely correct. Sorry for that. Just a second. Let me find it. Let me just check. 1.9 into 12,000 into 5.2. 1,18,560. My overall is correct, but this I'm sorry, this was an error here. It will be the actual only. It will be the actual only. Right? Now, actual costing is over. Actual costing is over. Second, you are required to do what? Normal costing. What are you required to do second? Normal costing. Now, you have written a note or you have got a screenshot. You have written a note or you have got a screenshot. If it is possible for the person who has taken the screenshot, if it is possible, if you have got that screenshot, post it onto your group so that everybody can see it in their mobiles or whatever. See that it in their mobiles or whatever. What I'm saying, now for your actual costing, for your normal costing, your direct materials, continue to be actual quantity multiplied by actual price, which is nothing but your actual numbers. So they will continue to be 1,18,560. Your direct labor is also going to be actual hours multiplied by actual rates. So it will be how much? 2,73,000. You need to understand that actual costing and normal costing for direct material and direct labor are always going to be the same. So this note I'm putting down over here. You have to remember that direct material and direct labor as per actual and normal costing, as per actual and normal costing will always be the same. You need to keep this much in mind. This is a very, very important aspect. The next aspect that actually comes out is variable overheads. Variable overheads are going to be your actual units, which is nothing but flexible budget multiplied by a budgeted rate. Multiplied by what? A budgeted rate. Now please understand, your actual units are 12,000, and these units have taken these units as per your budget. As per your budget, this actual is a actual unit based on budget. So while the actual units are 12,000, each unit for normal costing is taking 3 hours per unit, and it has a rate of 2 per hour. It has a rate of 2 per hour. Why? 2 is the variable overhead rate per hour. So this total comes to $72,000. Next, I come to fixed overheads. Fixed overheads again is the same thing. Again, for fixed overheads, we are going to take into consideration the same thing. Now, please understand. Just a second. Huh? Oh, okay. I have made an error. Over here. Please excuse me for the error. Allow me to re-explain this to you. Just a second. Huh? I seem to have lost the question. Do you mind if I do it again?
No
Yes,
problem,
sir.
No worries, right? Okay.
Yes, sir.
So our normal costs are direct materials 2 per unit at the rate of 5 per unit, dollars 5 per unit. Direct labor 3 per unit at the rate of $7 per hour. Variable overheads are $2 per unit on direct labor hours. Fixed overheads are given to be 3 per unit on direct labor hours. Actual performance is for 12,000 units. Direct material is 1.9 units of raw material at the rate of 5.2 per unit. Direct labor is 3.5 hours of labor hours at the rate of 6.5 per hour. Variable overheads actually incurred are $65,000. Fixed overheads actually incurred are $100,000, right? That's where we are at. Now, first of all, actual is the actual performance. This is always actual figures. When you are doing actual, don't even look at your, you can say, your budgeted costs or your standard costs. Don't even look at them. Don't look at them. Don't look at budget oblique standard. Don't look at budget oblique standard. So for direct materials, what will it be like? It will be 1.9 units for 12,000 units, 1.9 units of raw materials per unit for 12,000 units at the rate of 5.20, which will give you 1,18,560. Direct labor is 3.5 hours of direct labor per unit for 12,000 units multiplied by $6.5 per hour, which is 2,73,000. Then we have variable overheads. Variable overheads are actually what you are incurring, 65,000, and your fixed overheads are actually what you have incurred, $1 lakh. That's your situation. That's your situation. What is this? This is actual. What is this? This is actual. Actual. Did you look at budget standard? Tell me, yes or no? No, you are not going to look at the budget or standard. You are only going to refer to always what? Actual performance. Only refer to what? Actual performance. Now under normal, please pay attention to what will happen. Under normal, direct material and direct labor will always be equal to actual direct material and direct labor, because normal costing uses actual quantity multiplied by actual rate and actual hours multiplied by actual rate. You can say actual price, actual rate, it all means the same thing, right? Now direct material. Direct material, actually how much have you used? You have used 1,18,560. So the story is over. Direct labor, how much you have used? 2,73,000. This is the principle of normal costing. Now, let's take into consideration what the variable overheads are going to be. The variable overheads, as far as we are going to be concerned here, are going to be actual hours incurred multiplied by the standard rate. Multiplied by what? The standard rate. So what are the actual hours that you have incurred? The actual hours that you have incurred is 3.5 hours per unit for 12,000 units at the standard rate of variable is 2. So this comes to 3.5 multiplied by 12,000 multiplied by 2, which comes to 84,000. Now this is where I made a mistake while teaching you. No shame in admitting my mistake. At least you will not repeat that mistake. Whenever under normal, you are dealing with what? Variable overheads. Whenever under normal, you are dealing with what? Variable overheads. What is it that you are going to have? You are going to have actual hours. multiplied by the standard rate. Whenever under normal you are dealing with variable overheads, you are going to have actual hours multiplied by the standard rate. What are your actual hours? Your actual hours are 3.5 hours per unit. Actual hours incurred, these are nothing but your actual what hours? These are your actual direct labor hours. Why, sir, direct labor hours? For a very simple reason that variable overheads will be incurred as long as the direct labor was working. So the direct labor was working for 3.5 multiplied by 12,000, which is equal to a total of 42,000 hours. Direct labor was working for a total of 42,000 hours. And since they worked for 42,000 hours, it was budgeted that they will incur 2 per hour. It will be 2 per hour, right? So that is why it is going to be 2 over here. That is why it is going to be 2 over here. Next, let's take into consideration fixed overheads. What are fixed overheads? Fixed overheads are again going to be the same thing. They are going to be 3.5 hours per unit multiplied by how many units? Those many units. But the rate is going to be 3. So we are looking at 3.5 multiplied by 12,000 multiplied by 3. Our answer comes to 126,000. What does our answer come to? 126,000. So this is our normal summary. What is this? This is our normal summary. Now we go for the interesting one, that is standard cost basis. What is standard cost basis? Standard cost basis for direct materials will be standard quantity multiplied by standard price. Now ask yourself, you are revising your budget. So for 12,000 units, you will need a standard of 2 per unit. At what rate? At the rate of 5 per unit. So what is this going to be? This is going to be 120,000 direct labors. Then let's look at direct labor. Direct labor takes 3 per hour. For how many units? 12,000 units. At what rate? At the rate of 7. At the rate of 7. This will be 252,000. Next, we go to variable overheads. What are variable overheads? They are going to be whatever are the budgeted direct labor hours multiplied by the standard rate. Multiplied by the standard rate. What are the direct labor hours? They are nothing but 3 multiplied by 12,000 multiplied by what is your standard rate? It is 2 per unit. So this will be 12 3s are 36, 2s are 72,000. Now we come to our fixed overheads. Same logic, 3 hours per unit for 12,000 units. How did I get 3 hours? I got this from here. And what is the rate? The rate is 3. So 12 3s are 36, 3s are 108. This will become 1,08,000. This will become how much? 1,08,000. So this is your analysis of actual, normal and standard cost basis. It will prove to be a very, very important aspect. It will prove to be a very, very important aspect in your entire process, of applying this logic to all the questions that are going to come. After this, there is going to be now a non-stop question solving of, you can say, about an hour or two, whatever that you guys can take, and on the basis of that, we will keep progressing ahead. If
So
there are
on
any
the
doubts,
standard
questions,
costing, I'm
if there are
sorry.
any doubts, questions, or queries now,
Yes.
let's assimilate this and let's take that ahead. Yeah, please.
So on the direct labor under the standard costing, where did we got the 7 that we have multiplied with?
Rate is 7 per hour. See this?
Okay, okay, okay. My bad. Okay, thank you.
Please take a screenshot of this, whoever is the gentleman or lady doing it. Please take a screenshot of this and please put it up. And please put it up. Thank you. And please put it up. I'm assuming the screenshot's been taken. I'm assuming that the screenshot's been taken and I can clear it off. Yeah. Right. Now. I think in the previous lecture we stopped at question number 12. I think in the previous lecture we stopped at question number 12. Can somebody tell me if that's the right one? That we stopped at question number 12. We stopped at 12, right?
Yes, sir.
Yeah. So I guess we have to move ahead from that. We have to move ahead from question number 12. So I guess we are on question number 13 now. So let's take our journey ahead from question number 13. A easy question. What does it say? A company has observed the following costs at different levels of production, at different production levels. Cost A, cost B, cost C, cost D. You have to identify what is their cost behavior, meaning whether it's a fixed cost, whether it's a variable cost, whether it's a semi-variable, that is, it is a mixed cost. The way of doing this is very, very simple. First, always identify if there is a cost staying same at all levels of activity. Cost number B stays same at all the levels of activity. So cost that stays same at all the levels of activity, a cost that stays same on a total basis for all the levels of activity is obviously what cost? It's a fixed cost. Why it is a fixed cost? Because it is same on a total basis at all levels of activity. So cost B is obviously a fixed cost. You will notice everywhere they are getting it correct that it's a fixed cost. So by this rate, all the answers are correct. Now let me look at A. My dear friends, you know the rule that variable costs are fixed on a per unit basis and they are variable on a total basis. So a cost that is not fixed on a per unit basis, but it is variable on a total basis, it becomes a mixed cost or a semi-variable cost. So what do we know about mixed cost? Mixed costs are unfixed on a per unit basis and they are variable on a total basis as well. So let's take a look at A. Let's analyze A. How do you analyze A? It is nothing but 25,000 divided by 3250, comparing that to 50,000 divided by 5250 and comparing that to 75,000 divided by 7250. So 25,000 divided by 3250 gives me 7.69. 50,000 divided by 5250 gives me 9.52. So these two are not equal. Obviously, these two also then will not be equal. 75,000, it is clearly that they are not equal. Divided by 7250, this gives me 10.34. So this was 7 point something, this was 9 point something, and the last fellow is 10 point something. So they are not there. So this cost on a per unit also variable and total also it is variable. Therefore, A outrightly is a mixed cost. So whoever says mixed for A in the first option is correct. So this is correct, this is correct. Option A and D have been ruled out. Now the fight is between option B and option C. The fight continues between option B and under option C. Now let's look at option C. Let's look at cost C. Now cost C is what? Cost C is 25,000 divided by 2750. It is 50,000 divided by 5,500 and it is 75,000 divided by 8250. Right? Now anybody who can look at numbers and can establish a relationship between them will not have to calculate. Why are you saying it like this? My dear friends, what is the double of 25,000? It is 50,000. And what is the double of 2750? 2750 into 2 is equal to 5,500. They are the same. Essentially, this fraction is the same. Check it out. 25,000 divided by 2750. What is your answer? Your answer is 9.09. Over here, it is 50,000 divided by what? It is 50,000 divided by 5,500. The answer is again 9.09. The answer is again 9.09. So they are the same. Next, we are doing what? 75,000 divided by 8250, and you will get it. No surprise that it is again 9.09. Why? Because 50,000 plus, you can say 50% is equal to 75,000, and 5,500 plus 50% is 8250. Essentially, all of these fractions are exactly the same. Essentially, all of these fractions are exactly the same. So cost C is fixed on a per unit basis. Therefore, it is variable. Therefore, it is variable. Cost C is a variable cost. Automatically, this is correct. And this option is also ruled out. So your answer is option number B. But for the sake of, my satisfaction in the exam, since I have time, I will also look at cost D and I'll do the analysis. It will be 25,000 divided by 1750, 50,000 divided by 2,500, and 75,000 divided by 3,000. So what are we looking at? 25,000 divided by 1750, which is 14.28. We are looking at 50,000 divided by 25,000, which is nothing but 2. Right? So 25,000 divided by 1750. Our answer was 14.28. Second case, our answer is, it's 2,500, sorry, not 25,000. So it's 50,000 divided by 2,500. The answer is 20. So here it is 14 point something, here it is 20. So of course they are not equal. So they are not fixed on a per unit basis. So cost number D is not fixed on per unit. Therefore, it is not a variable cost, and it is not fixed on a total basis. Therefore, this is nothing but a mixed cost. So it is a mixed cost, and here again they have gotten it wrong here. So they have jinxed it out here. So this is your answer. This is your answer. Last time we actually calculated the variable aspect of every one of them. We don't need to do all that stuff this time. We don't need to do all that stuff this time. What we have is more than enough. I request a screenshot to be taken of this. In case somebody is writing, you can honestly tell me that you are writing. I will patiently wait for you to finish. In case you're not, you're taking screenshots and relying on them, we can go ahead to the next question. Kindly guide me, I'll go ahead accordingly. What are we doing, guys? Please tell me. Guys, please tell me. Guys, what are we doing? Can you please tell me?
Yes, done with the screenshot.
You're done with screenshots, right? So I'll just taken, or you need to take?
Taken, sir.
Then that was question number 13. Question number 14. Simple question, because now you know what is actual costing, you know what is normal costing, you know what is standard costing. A manufacturing company uses machine hours as the only overhead allocation basis. Now they are using machine hours. Okay, they are not using labor hours. The accounting records contain the following information. The accounting records contain the following information. Manufacturing overhead costs estimated to be 200,000, actual is 2,40,000. Machine hours are 40,000, actual are supposed to be 50,000. Use actual costing. What is the amount of manufacturing overhead that is allocated to the job? My dear friends, actual costing will always use actual costs and nothing else. Actual costing is based on actual costs and nothing else. So you are using actual costing. Actual costing is based on actual cost and nothing else. So what is your actual cost? 240. Your answer will be 240. Right? Pretty simple, pretty straightforward. Take a quick screenshot and we are good to go on this question. This question is over. Right? I'm assuming screenshots are being taken at a fast speed. Right? Let's go ahead. Now we come to question number 15. Question number 15, interesting question. Question number 15, interesting question. What does question number 15 talk to us about? Question number 15 tells us that Kimber Company has the following unit costs for the current year. There are direct materials, there are direct labors. There is direct material, there is direct labor. right? Apart from that, what do we have? We have variable manufacturing overheads. We have variable manufacturing overheads and we have fixed manufacturing overheads, taking our total unit cost to $70. Now, the fixed manufacturing cost is based on an annual level of 8,000 units of activity. Based on this data, the total manufacturing cost expected to be incurred to manufacture 9,000 units in the current year will be how much? Fair enough. You are based out on an annual activity level of 8,000 units. Now, let us see where we go. Now, understand one thing. 8,000 is the range. 8,000 is your predicted level of activity. Now, see, please understand. Now, for 8,000, you are going to say at the rate of 15. So, this will come to 1,20,000. So, whether you make 9,000 or whether you make 7,000, in both the cases, you are going to have 1,20,000 only as your fixed cost. Why? It is assumed that since it is a fixed cost, 9,000 falls within that range of activity where the fixed cost stays unaffected. That the fixed cost stays what? It stays unaffected. Please understand this. Now, raw materials are variable in nature. Direct labor variable in nature. This is also again variable in nature. So, raw materials are 20 per unit. Is based on an annual activity. Based on this data, the total manufacturing cost expected to manufacture 9,000 units. So this is a cost statement. For 9,000 units. I'm just going to finish my calculation and then pay heed to the message. So this is for 9,000 units. So how much will this become? This will become 1,80,000. Now let's look at direct labor. Direct labor is what? 25 per unit. For how many units? 9,000 units. This will become 2,25,000. Next, I have variable overheads. They're how much? 10 per unit. For how many units? 9,000 units. So this will become 90,000. My fixed will stay fixed, as I have written a note over here. So I'm going to just put a star mark here, and it will be 1,20,000. And my total here will come to 6,15,000. The only thing that was difficult over here was this fixed overhead note. That is the only thing that probably would create an apprehension in my mind. Nothing else. So I have gotten a response from 7 that it is C and 7 is right. I got a response from AR that it is D. No, it's not D. So you got to be careful about that. It's not D. Why it is not D has been understood over here. Right, guys? So we are looking at question number 15. If there are any doubts over here, please speak up. If there aren't any doubts, then I can go ahead. If there aren't any doubts, then I can go ahead. Shall I go ahead? I'm assuming it's done and I'm assuming that a screenshot also has been taken, right? Okay. Let's come to question number 16. Well, question number 16 is a good question. They are saying the review of Plunkett Corporation's accounting records for the last year has disclosed the following selected information. The variable costs are direct materials, direct labors, manufacturing overheads, and selling costs. The fixed costs are manufacturing, selling, and administrative. In addition, the company has suffered a 27,700 uninsured factory fire loss. What are the Plunkett's period costs for the last year? Now, since there is nothing that has been assumed, here, we shall assume in absence of any specific information, that Plunkett uses and applies absorption costing. Why absorption costing? Because that is the way you have to make your financial statements. Marginal costing is for internal purposes. I don't care what they do internally. I don't care what they do internally, but they are going to be doing marginal costing, if at all, for internal. I don't care. There is no data here that says anything about marginal costing. I will assume that they are using what? Absorption costing only. I will assume that they are using what? That they are using absorption costing only. So now under absorption costing, all costs of manufacture, whether fixed or variable, are product costs, and all non-manufacturing costs, are period costs, Now you need to understand. Direct material is manufacturing, therefore it is period. Product, therefore it is product. Direct labor is manufacturing, therefore it is product. Manufacturing overhead is manufacturing, therefore it is product. Selling cost is non-manufacturing, therefore it is period. Manufacturing overhead is manufacturing, therefore it is product. Selling costs are non-manufacturing, therefore they are period. Administrative costs are non-manufacturing, therefore they are period. A fire is again non-manufacturing, therefore it is period. A fire does not help you manufacture. It's an abnormal loss, and all abnormal losses are considered to be period losses. Right? So over here in product cost, what will come? You will have direct materials, 56,000. You will have direct labor, 179, 100. You will have manufacturing overheads. You will have manufacturing overheads, 154 plus 267. What is the total? It will be 56,000 plus 179, 100 plus 154 plus 2,67,000. What is the answer? The answer is 656, 100. So your product costs are 656, 100. Now I'm going to period. In period, what will come? Selling costs will come. They are 1,08,400. Then we have fixed selling costs, which are 1,21,000. Then we have admin costs, which are 2,35,900. So what is the total? 1,08,400 plus 1,21,000 plus 2,35,900. What is the total? It is 465,300. What is the total? Is it? Let me just do it again. It is 465,300, and you have that fire also, which I forgot, which is 27,700. So what are we looking at? 1,08,400. We are looking at 1,21,000. We are looking at 235,900, and we are looking at 27,700. So our total comes to, or your period totals come to 4,93,000. So this is your answer. This is your answer. I hope you're understanding. I hope you're understanding this. I hope there are no problems in understanding this concept. Yes, you have a doubt. You have a doubt. Number 7. Go on.
So if here the question is silent about which method we use. If you use marginal costing,
of course, I'll be happy to do this on marginal costing, but for that I'll have to rewrite. So,
okay.
So I will make a same chart for marginal costing as you have said. First take screenshot of absorption, then I'll make screenshot for marginal. Okay. Just 2 minutes. In 2 minutes, I'll give it to you. Okay. Screenshot is taken. Please actively tell me. I'll keep asking otherwise.
Yes, sir.
Screenshot is taken. Come on, and guys, look. We all would like to go to bed. I understand that we all love me a lot, and I'm so popular that I understand all that. But still, sleep is sleep. So I don't want to deprive you of it. Right now, a fantastic question came from this gentleman. Your name, please. It's okay. Mazak kar raha hu. Right? So the gentleman asked me a question. What if, boss, this was marginal? Of course, yes. Let's give him his answer. And he'll be happy to know that there is a question like this waiting for him ahead. So suppose if this was marginal costing was applied here. Suppose marginal costing was applied over here by Plunkett Corporation. What? Marginal costing. Now, under marginal costing, what you need to understand is that all variable manufacturing overheads. That all variable manufacturing overheads are product costs. Apart from all variable manufacturing overheads, everything else which includes fixed manufacturing overheads as well are what are period costs. So these are all variable manufacturing overheads are product costs, and baki everything is a period cost. So direct material 56,000 product, direct labor 179,100 product, manufacturing overhead variable so 154 product. What about this? It is fixed, so it will go to period. It is selling, it will go to period. Everything else is period. So your selling costs 1,08,400 period. Your manufacturing overheads which are fixed 267,000 period. Selling costs 121 period. Admin 235,900 and fire abnormal loss 27,700. Take total 56,000 plus 179,100 plus 154. It is 389,100. It is 389,100, and over here the total is 1,08,400 plus 2,67,000 plus 1,21,000 plus 235,900 plus 27,700. Your answer is how much? 760. This is under marginal costing. Take this as extra. Take this as an apex extra based on doubt, and take a screenshot and take a screenshot and take a screenshot. Any doubts over here? I hope not. Any doubts over here? I hope not. I hope not. I hope there is no doubts. I hope there is no doubts. Right? Please take screenshots. Assuming it's taken, can I move ahead? Assuming it's taken, can I move ahead? Okay. Next. Question number 17. Theory question, but deeply conceptual. Theory question, but deeply conceptual. Normal costing systems are said to offer a user several distinct benefits when they are compared with an actual costing system. Okay. Which one of the following is not a benefit? Well, more timely costing of jobs and products. Yes, they are a benefit. Why is that a benefit? Because normal cost data will be available before actual cost data. A smoothing of product costs throughout the period. A smoothing of product costs throughout the period, yes, it will happen because normal costing uses standard rates. Improved accuracy of job and product costing. How will accuracy improve by using normal costing? How will accuracy improve? It can't. It can't. Accuracy needs real numbers, need real data. And this real data is available only in actual basis. So statement numbers is false statements. A more economical way of attaching overhead to a job or product. Yes. Why is it more economical? Why? Because it uses budget. It uses budget, so it is considered economical. It is considered economical because it uses a budget. That's about it. So what is your answer over here? This is correct, and this is correct. They are asking you which is not correct. So your answer is C. Here your answer is C is not a benefit, but A, B, and D are benefits. This is an important slide. Why? Because from a theory or an essay question perspective, and we are going to do essay questions also for this chapter, don't worry. I've earmarked essay questions in this for this chapter. So we're going to do that. I don't want you to worry about it. So from a theory or an essay questions perspective, this slide is useful as writing inputs. The slide is useful as a what? This slide is useful as a writing input. Are you with me on that? The slide is useful as a writing input. Please be careful about it. Please take a screenshot of this one. Somebody saying anything? Need something? Right. Let's go ahead. Let's go ahead. Question number 18. From the following budgeted data, calculate the budgeted indirect cost rate that would be used in a normal costing system. So that's question number 18. Let's go ahead now. In the absence of any specific info, we are going to allocate the budgeted rate based on your direct labor hours. So budgets are allocated based on direct labor hours. Budgets are allocated what? Based on direct labor hours. So please understand this concept. Now, first of all, they are asking you budgeted indirect cost rate, means they are asking you what? Overheads. Calculate overheads to begin with. What are your overheads? Your overheads here are 50 lakhs and 70 lakhs. So they are what? Total indirect labor. Indirect labor is an overhead, and total indirect non-labor. So indirect non-labor can be indirect material, it can be factory rent, it can be warehouse rent, it can be depreciation on machinery. Anything which is not related to labor but it is an overhead can come over here, right? So what are we looking at? We are looking at 50 lakhs plus we are looking at 70 lakhs. So what are we looking at? We are looking at 1 crores and 20 lakhs. We are looking at 1 crores and 20 lakhs. Now, my dear friends, this 1 crore and 20 lakhs has to be allocated, a rate has to be arrived upon. And the only way of doing that is direct labor hours. What is that? Is direct labor hours. So I will take direct labor hours. So the rate that I will have for this is going to be 1 crore 20 lakhs divided by 2,50,000. What do I get? 1 crore 20 lakhs divided by 2,50,000, and my answer comes to $48 per direct labor hour. $48 per direct labor hour. Are you with me, guys? I hope you are. Please copy this down. I hope you are with me. Please copy this down. Yeah, you have a doubt. Please go ahead.
सर इसमें क्वेश्चन इनडायरेक्ट कॉस्ट रेट पूछा है ना, इनडायरेक्ट कॉस्ट रेट या
Indirect costs are for overheads.
तो हम लोग 50,000 आवर्स नहीं लेंगे?
नहीं देखो, ये तुम्हारे जो 50,000 आवर्स है ना, वो सिर्फ इस पे लगेंगे. इसका क्या है?
ओके
इसका क्या है? आई बात समझ में? Guys, please rename the way I had requested you to. There are still a few people. It's causing a slight irritation to me. I mean, it's a basic etiquette. I respect you to follow. I request you to follow it here. Let's please be careful about these things. Please be careful about these things. Right. You understood your doubt? This can't go, no? This is non-labor related.
Yes,
How
sir.
will you break this?
Yes.
But overheads, I told you, will be incurred as long as labor is incurred. So both of this can be related to whom? Direct labor hours. See, if you do it now, you'll have a fractured rate. You'll have 50 lakhs divided by 50,000. And then for this 70 lakhs, now you will not have any basis. On what basis are you going to do this? There is no basis. You get me?
Yes, sir.
This basis has to be there. So copy this down. Got it? Let's go
Yes,
ahead.
sir. Thank you.
So this is a good one. A company plans to produce 50,000 units. This is a very good one. I would mark this question as important. I would mark this question as an important question. A company plans to produce 50,000 units with $5 lakhs of manufacturing overhead. The budgeted machine hours per unit is 2. My dear friends, you have your standard budget right here. Standard budget which is static. You have it right here. What is that? You will have 50,000 units, 2 hours per unit, and $5 lakhs of manufacturing cost. The company's actual result indicated that it spent so and so and used machine hours using a standard that upon machine hours, overheads are allocated on the basis of machine hours. So 50,000 units at the rate of 2 hours per unit is 100,000 machine hours. 50,000 units multiplied by 2 hours per unit. What is this? Is going to be 100,000 machine hours. How many hours? These are 100,000 machine hours. What is the machine hour rate per unit? Machine hour rate per unit will be 5 lakhs divided by 1 lakh, which is equal to $5 per hour. How much? $5 per hour. Are you with me on that? This $5 per hour. Now, they are asking you what? They are asking you to find out under a standard costing system. Under a what? Under a standard costing system. Now, please pay attention. Under a standard costing system, what will I say? I will say under a standard costing system, actual units multiplied by standard hours. Why? What happens because of this? This is nothing but a flexible budget. And standards use only standards, so flexible budget is a must. So this is flexible budget. Standard actual units multiplied by standard hours multiplied by standard rate per hour. Multiplied by standard rate per hour. So what are the actual number of units that you have? You have 49,000 units. Multiplied by standard hours per unit. It takes you 2 hours per unit. At the rate of what? At the rate of $5 per hour. So we are looking at 49 into 2 into 5. We are looking at 490,000. We are looking at $490,000. If I was to do this on a normal costing basis, I am looking at actual hours multiplied by standard rate per hour, which is equal to 99,000 machine hours multiplied by 5 per hour, which is equal to 495,000. The company's actual result, it spent 5 lakh 5, produced these many units, used these many hours. And of course, my last one is actual costing. This is nothing but actual incurred. This is nothing but actual incurred, which is nothing but 5 lakh 5,000. This 5 lakh 5,000. So what is this? This can't be the answer. This is actual. This can't be the answer. This is given to confuse. 595 cannot be the answer. Why? Because it is normal. This is the answer because it is standard costing. Please take a screenshot of this. Very, very important. I want you to note that standard costing system is nothing but flexible budgeting. It is nothing but flexible budgeting. If you will permit me, I would like to talk on this for some time, maybe 4 to 5 minutes. I hope that's okay. This will help you out a lot in your exams if you allow me to give you a small speech on this for 5 to 7 minutes after you have taken the screenshot. If that's okay with you, please tell me. I would like to talk to you about this.
Yes, sir, please.
Yeah, I would like to talk to you guys about this. So the screenshot is taken. The screenshot is taken. Yeah.
Yes, sir.
Yes, sir.
Let's talk about this for some time now. Let's talk about this for some time now. Focus on this. Let's see. Now see here. You have been given a standard budget. You have been given a standard budget. In this standard budget, they are saying 1 unit will take 4 hours. Okay, 1 unit will take 4 hours. They are saying 1 unit takes 4 hours, and they further go on to say that just a second, let's take it in their lingo. 50,000 units. Yeah, 1 unit takes 4 hours, and the budget production that you are going to undertake is 10,000 units. How many units? 10,000 units. And the budgeted overheads are $120,000. Let's take a look at this. Let's take a look at this. 1 unit is 4 hours. This can be either machine or labor. You can take it anyhow you want to take it. So overheads allocated on the basis of either labor or machine hours. So we are looking at 1 unit budgeted to take 4 hours. So 10,000 units will take how many hours? 40,000 hours. Now, what is the cost of these 40,000 hours? It costs 120,000. This is how much? This is 3 per hour. This is how much? This is 3 per hour. How much is this? This is 3 per hour. Now, please understand what I'm going to say ahead. This is 3 per hour. All of this is budget. All of this is budget. Actual can be something totally different. In actual, 1 unit, let's say, has taken you 3.95 hours. Possible? 3.95 is too close as a number. I'll take it as taken as 3.5 hours. Right? Your production is of 18,000 units. And your overheads are 6 lakhs. It's possible. It's possible. Now, on an actual basis, please understand that if this is the case, the actual hours worked is 18,000 multiplied by 3.5. So it is 18,000 multiplied by 3.5. It will give you 63,000 hours. Right? Let's take this as 6,30,000. Why it is divisible? No other reason. I want to take it 6,30,000 only for the reason that there is a divisibility, mathematical divisibility. It is easier to understand the writing, no other thing. Right? So what is the rate going to be? 6,30,000 divided by 63,000. $10 an hour. This is what? $10 per hour. Right? Now, if I was to go for a normal system, now please understand what will happen in a normal system. In a normal system and in a budget. Now, first of all, you tell me one thing. Can you compare actual 18,000 units with standard 10,000 units? It is not comparable. Yes or no, please tell me that. It is not comparable. What will you revise? Always budget is revised. Always what is revised? Budget is revised. Now look over here how the standard budget will get revised. The standard budget will be revised to how much now? It will be revised to
18,000.
18,000 units. Now please pay attention. For making 1 unit, it takes you how much time? 4 hours. So for 18,000 units, it will take you how much time? 18 further 72. And what is the rate per hour? It is 3 per hour. So what is your standard cost now? It is 72 multiplied by 3. What is your answer? 2,16,000. Are we clear about this? Are we clear about this? Yes or no? Please tell me that. Clear? Yes or no? Yes or no, guys?
Yes.
Now look at normal. Normal will not consider revised units. It will go as per actual hours. It will go as per what? It will go as per your actual hours. It does not care about the rest. It does not care about the rest. Please understand this. Are you with me? Yes or no? Please tell me that. Are you with me? Guys,
Yes, yes.
what are your actual hours? Your actual hours that you have taken are 63,000 and it will hit at standard rate. What is your standard rate? 3 per hour. This is 63,000 multiplied by 3. What is the answer? 1,89,000. Are you with me on that? It will be what? 1,89,000. But here, this is revised. This is standard hours per unit. This is nothing but actual hours straight away. Multiplied by what? Multiplied by the rate. Multiplied by the standard rate. I hope you're with me on that. I hope you're with me on that. Please take a screenshot. Please take a screenshot. Taken?
Sir, how can we have a two rates over here? 4 per hour and 3 per hour. Two standard rates.
This is rate per unit. This is, where is it gone? This 4 per hour. This is 1 unit बनाने का कितना time लगा? 1 unit बनाने को 4 घंटा लगा. This is not 4 per hour. This is 1 unit taking 4 hours to be made.
Okay, okay.
This working on that machine costs you $3 per hour. See, you are making 1 unit in 4 hours and the machine on which you make it is operated at the rate of $3 per hour.
Got it, sir. Got it.
Understood? Chalo, go on. If the screenshot is taken, let's move ahead.
Yes, sir.
Very good question. Mark this as important. Very good question. Mark this as important. Merlin Company uses a standard cost accounting system. Data for the last fiscal year are given as follows. The beginning inventory of finished goods is 100 units. The production during the year is 700. The sales are 750. Obviously, the closing stock will be 50. The product selling price is 200. The standard variable manufacturing cost is 90. The standard fixed manufacturing cost is 20. This 20 is taken on a denominator level of 750 units of activity. This is 750 units of activity. Next. Budgeted selling and administrative costs, which are all fixed, are $45,000. Are how much? $45,000. There is no price efficiency or spending variance. There is no question of variances that is arising as far as this particular company is concerned. Any volume variance is going to be written off to COGS. There is no work in progress. Any volume variance is going to be written off to COGS. My dear friends, it is possible that you have probably you have some kind of a volume variance. At the present moment, you don't have to worry about any volume variance. Why? Because at the end of the day, you're using, a standard cost mechanism. So anyway, doesn't matter. Let's get into analyzing this question. Pretty simple question, but I will say very, very, very important question. The simplicity of the question is not my concern. The importance is my concern, right? So now please understand the amount of operating income using variable costing. We are looking at the amount of operating income using variable costing. So if we are using variable costing, if we are using variable costing, any spending variances, any underutilization or overutilization of fixed overheads will not impact the COGS. Please understand this. Any variance due to overabsorption or underabsorption will not impact the cost of production. Underabsorption or overabsorption of fixed overheads. Why? Because we are using variable cost. Because we are using variable cost. Because we are using variable cost basis. Now, let's understand what is the meaning of my statement. Let's understand what is the meaning of my statement. The denominator of level of activity is 750 units for the year. My dear friends, please understand. The denominator level of activity is the bare minimum. I will not use the word bare minimum, is what you are expected to produce. In this case, it is 750 units. In this case, it is 750 units. This is absorbed at the rate of 20 per unit, and this comes to 15,000 as your fixed overheads. What are your fixed overheads? 15,000. So please understand that your actual production is 700 units. Now, please understand that you are expected to produce how many? 750. But you have produced how much? 700. So can I say that your actual production is less than your budgeted production? You have actually produced 700 when you were budgeted to produce 750. Agreed or disagreed? Please tell me that. You have produced 50 less. You have produced 50 less units. Agreed or disagreed? Please tell me that. Do you agree to this? Guys, any responses? Any responses,
Agreed.
guys? You have produced 50 less units. What is the meaning of 50 less units? See, basically, is it good or it is bad? This is a bad sign. See, being less than standard is a bad sign. Being less than standard is a bad sign. Why is it a bad sign? Array, expectation is 750, you are doing only 700. That means 50 units less. How much are you expected to recover in cost per unit? 20. Therefore, you have recovered how much less? 1000 is recovered less. This is called under absorption. This is a fixed cost, or this is fixed cost related. But understand, under variable costing, fixed costs are not a part of the cost of production. Therefore, under variable costing, this under absorption is ignored. But if this was absorption costing, this would not be ignored. This would not be ignored. This is under absorption. This is ignored under variable costing. But if this was absorption costing, I would not ignore it. Do you understand this, what I just wrote? Because variable costing does not consider fixed overheads to be a part of the cost of production. That is why I'm ignoring this. That is why I'm ignoring this. But if this was absorption costing, you will have seen that 1000 will be added to the cost. Are you with me on that? Yes or no? Please tell me.
Yes, sir.
Yes, sir.
Everybody understand this concept?
Yes, sir.
Yes? I hope
Yes,
you
sir.
do. Please take a screenshot of this. Please take a screenshot of this. Taken?
Then
Now let's take a look at this. What are we looking at? We are looking at standard variable manufacturing cost. That is 90 per unit. That is how much? That is 90 per unit. Now please understand. Now please understand. What is your sales? Your sales are 700 units. How much? Oh, I'm sorry. I'm so sorry. Your sales are 750 units. At what rate? At the rate of 200 per unit. So this is how much? 150,000. Now sales less, you can say COGS or you can say variable cost. Now, what is your variable cost per se? Now, if I was to say I have produced 100, 700, opening stock is a part of cost. So this will come at the variable, which is 90. Closing stock production of the period here. So what I'm actually writing down is opening stock. See here. Sales are how many units? 750 units. At the rate of how much? At the rate of 200. 1,50,000. Now from this, I will subtract cost of production, all variable. Opening stock is 100 units and this is your variable cost. To this, I will add production, which was 700 at the rate of 90. So I am looking at a total production of 800 at the rate of 90. Please understand that opening stock is in current year's cost of production always. It was last year's closing stock, it is this year's opening stock. From this, I will subtract closing stock. My closing stock is 50. Why is my closing stock 50? Opening stock plus production minus closing stock is equal to sale. And my sale is 750 units. What is my sale? My sale is 750 units. Now, this into 90 will be subtracted. So can I say that my total production is nothing but 750 into 90? Yes. So over here, I will write down 750 multiplied by 90. So 750 multiplied by 90 here gives me 67,500. What do I have? I have contribution. This will come to 82,500. Now, out of this, what do I have to subtract? I will subtract less the fixed cost. What is my fixed cost? 15,000. Why is my fixed cost 15,000? Because I have a denominator level of 750. At the rate of 20 per unit. So that is why it is this much. And I have selling cost. And I have selling cost in this question. What is my selling cost? My selling cost can be clearly seen to be, my selling cost over here is clearly seen to be 45,000. It is 45,000. I hope this is clear and logical to everybody. So now here I come, and I put in 45,000. 82,500 minus 15,000 minus 45,000. What is the answer? 22,500. What is this? This is your operating income. What is this? This is your operating income. What is this, ladies and gentlemen? This right here is your operating income. This was under variable costing. This was under what? Variable costing. Please understand. This was under what? Variable costing. Now, if I was to do this same question, and I was to do this under absorption costing, what would my calculations be? Should be your doubt. So the first thing that I would recommend you to do is, if it's possible, I'll wait. Quickly write this down. Then let's read it together with your question. Or I don't know how you'll do it. But I would like to interlink this to your question. Can we do that? Guys,
Yes,
can we
sir.
do that? Let's do this question again. Okay, everybody? Let's focus once more. We are not going to do just this question. We are going to do this question by absorption also and by marginal also. Am I clear about this? Guys? Okay. So now, I would like to, first of all, I am putting all the data down and I am doing this under marginal costing. What is it that you need to keep in mind about marginal costing? Only variable manufacturing costs are considered as a part of cost of production. And what do you need to know about absorption costing? Both the fixed and the variable costs are a part of cost of production. Agreed or disagreed? Agreed or disagreed? Please tell me that. Agreed or disagreed? Please tell me that. Please tell me agreed or disagreed. Agreed, guys? I'm assuming agreed. Okay. Now, sales in both the cases is unfettered. Nothing happens to sales. Sales was 750 at the rate of, if I'm not mistaken, it was 200. 750 at the rate of 200. Correct. This will be 1,50,000. I'll shut this off. Now I'm going to calculate cost of production. Please pay attention. Opening stock 100 units plus Production. How many units? 700. Minus closing stock 50. Variable cost पे जो जाएगा. Here it is variable cost at the rate of 90 per unit. So 100 multiplied by 90. बरोबर है? It's 90, no? Let me just check. It's 90.
Yes, sir, 90.
It is 90. It is 90. 100 multiplied by 90 plus 700 multiplied by 90. So 100 into 90 is how much? 9,000. 700 into 90. 63,000. Correct? And less 50 into 90, which is how much? 4,500. Sir, why less? It is closing stock. So 63 plus 9 minus 4.5. What is the answer? 67,500. 67,500. Now, if I'm going as per absorption costing, I'm going as per absorption. Here it will be variable plus fixed. I will take variable plus I will take fixed. Now, please understand the funda here. Standard fixed cost. What is my standard fixed manufacturing cost? My standard fixed manufacturing cost is 20. It is 20. But when it is put across how many? When it is put across 750 units. Please understand this. Please understand this. Do not be fooled. Do not be fooled. So it is over here 90 and over here 20. Right? So 100 multiplied by 110. What is your answer? 11,000. 700 multiplied by 110. How much are we looking at? 77,000. And 50 multiplied by 110. How much are we looking at? 5,500 less. But understand one thing. Understand one thing. That when you are expected to make how many units? 750 units. You have made only 700 units. That is 50 units less. That is 50 units less. How many units less? And what is the fixed cost per unit? 20 allocated. What is this? This is under absorbed. Under absorbed fixed cost. This will impact only absorption costing. This will impact only absorption costing and not marginal costing. Sir, why it will not impact? Any volume variance is written off to cost of goods sold in the year incurred. Any volume variance is written off to cost of goods sold. But my dear friends, marginal costing does not take into consideration fixed costs as a part of cost of goods sold. So even if there is a fixed cost variance, it will not impact. Even if there is a fixed cost variance, it will not impact the COGS under variable, because marginal, that is variable costing, does not consider fixed costs as a part of cost of production. Hammer this in your head. Are you with me? It is a variance. It has to be considered. But will you take this in marginal costing? No. Where will you take this? In absorption costing. In what? In absorption costing. Will you take this in marginal costing? The answer is no. The answer is no. Are you with me on this
Yes, sir.
point? Now tell me yes or no. Now tell me yes or no. Hubli,
Yes, sir.
Yes, sir.
Understood, sir.
Understood? Divya,
Yes, sir.
Sir, it's on record.
that's okay. Now, the whole purpose is defeated if I don't understand whether they have understood. Good. If you have understood, then good. If not, just call me. I'll be happy to talk to you. Right? Now see over here. This 1000 will be added to their cost over here. So what are we looking at? 11,000 plus 77 minus 500 plus 1000. इधर कितना आएगा? इधर अपने को आएगा 83,500. इधर अपने को आएगा 83,500. So you need to be very or probably, I don't know, careful about this. So now cost of production. Over here under marginal costing. What is your answer? Your answer under marginal costing will be 67,500. And here it will be how much? 83,500. So 1,50,000 minus 67,500. 82,500 and 1,50,000 minus 83,500. We're looking at 66,500. Let's call this gross profit. What will we call this? We will call this gross profit. From this, what will be removed? Fixed selling and admin. I think that was something 45,000. So 82,500 minus 45,000. What I'm left with? I'm left with 37,000. I think it's 45 or what is it? It is 45, right? It is 45. Just a second. Yeah, this fixed selling minus fixed production 15,000. This was not considered here. Not this is subtracted here. Subtracted cost, not considered only. This 67,500 does not have a single element of fixed cost. There is no fixed cost element in this. But aren't your fixed costs your costs? Don't you have to recover them? So yes, I do have to recover them. So 37 minus 15. What is my final operating income? It's 22,000. And what about this? Here, this 83,000 is variable plus fixed. Now from this, what will I remove? I just will throw out this. So this is 66,500. Minus I'm looking at 45 here. So I'm left with how much? 21,500. What is this? This is my operating income over here. And this was selling and admin. This was my GP. And this considered as variable plus fixed. This is both those questions. This is your, I think, question number 20. And this is your question number 22. These are your answers. Very important. I think most important concept of today was this. Because somewhere you have to understand how this actually has to work. Are you guys with me on that? Are you guys with me on that? Yes or no?
Yes, sir.
चार्जर किधर है? Wait, ये record हो रहा है. अच्छा, 1 second. I need my charger. My phone's almost out. Just 1 second. Just 1 second. Sorry. Understood this? Right? Should we do the next question? Take a screenshot. Take a screenshot. Take a screenshot. Now see, I'm going to sit with you guys. Don't worry. Are you overloaded? You want to stop here, or you are good enough to continue for set 2, 3, or at least one more question?
One more question, sir.
Yes, sir.
Good man. Good man. That's the spirit. Good man. That's the spirit. So, screenshot taken. The next question is a Banya question. Believe me, it's a Banya logic question. There is absolutely nothing CMA about it. Welcome to high school mathematics. This has got nothing, goddamn nothing to do with costing. This is pure mathematics. Are you with me? This is pure mathematics. Please pay attention. Loyal Company produces 3 types of men's undershirts: t-shirts, v-necks, and athletic shirts. In the folding and packaging department. Now, if you look at, I don't know about girls' shirts, but I know about gents' shirts. That when a gents' shirt is manufactured and it comes to you, right? It comes to you folded, packed. Like if I was to talk about this shirt will not come to you like this. It will come to you folded, right? And the salesperson at the departmental store will sort of take it out and match your collar and all that rubbish. The fact that you have to fold it, you need labor for it. Agreed or disagreed? You tell me that.
It's
You need labor for it. That is not the labor that makes the shirt. The labor that makes the shirt is different. Those are your tailors and your other guys. This is indirect labor. This is packaging cost. This is packaging cost. You have to put it in the box or whatever. Now you are calculating that packaging cost of folding the shirt. Of doing what? Of folding the shirt. You are calculating the packaging cost of folding the shirt. Operations costing is used to apply cost to individual units based on standard time allowed to fold the package each type of undershirt. Standard time to fold is what? T-shirt takes 40 seconds per unit. V-neck shirt will take 40 seconds per shirt. And athletic shirt will take 20 seconds per shirt. Now, what is the total cost in the packaging department is this much. Why did I incur this cost? Why? I incurred this cost on account of 3 things. First thing, I incurred this cost on account of t-shirt. What happened over there? It took me 40 seconds to fold one t-shirt. Like this, I had to fold how many t-shirts? 50,000 t-shirts. So this was 50,000 multiplied by 40, which is 20 lakh seconds of work. Agreed or disagreed? Just give me thumbs up. Then I go to V-neck. V-neck takes me another 40 seconds to fold. And how many such V-necks I have? It takes me 40 seconds to fold. How many such V-necks I have? 30,000, boss. Yes or no? So 40 multiplied by 30,000. 12 lakh seconds worth of work. Then I have athletic shirts. I have athletic shirts. How many? 20 seconds for one shirt. And this way, I have 20,000 athletic shirts. So 20 multiplied by 20,000. What is your answer? 4 lakhs. Correct? Are you with me on that? Yes or no? Please tell me that. Yes or no? Please tell me that.
Yes, sir.
Are you with me? Okay.
yes, sir.
So 20 lakhs plus 12 lakhs plus 4 lakhs. What is the total? What is the total? The total is 36 lakh seconds. Requires $78,200 of work. 1 second requires how much? The answer is 78,200 divided by 36 lakhs. Your answer is $0.021722 is the cost of working in this particular department for 1 second. Is the cost of working here for 1 second. What is the cost applied to each t-shirt for 1 second? It is costing you 0.021722 for 40 seconds, which is for the t-shirt. How much it will cost you multiplied by 40? Your answer is 0.8688888 all the way to, I don't know, farthest is Al Noor, all the way till Saudi Arabia. I have to write 8 only. So I am rounding it off to 4 decimals. Why? Because my answer I can see here in 4 decimals. Why? Everywhere is bloody 4 decimals, no guys. Just fucking round it off at 4 decimals. Finished. Are you with me on that? Are you with me on that? Have you understood? Quick revision.
Yes.
Yes, sir.
One t-shirt, right, takes 40 seconds. One v-neck takes 40 seconds. One athletic takes 20 seconds. How many total? 50,000 t-shirts. So 20,000 seconds. V-neck, how many? 30,000. So 30,000 into 40, 12 lakh seconds. 20 seconds for an athletic, and there are 20,000 athletics. So 4 lakh for that. So total 36 lakh second worth of work costs us $78,200. How much does 1 second working here cost us? It cost us this much. It cost us this much. As a matter of fact, you can get the direct answer over here also. You can do 78,200 multiplied by 40 divided by 36 lakhs. You will still get the same answer. But I did 1 second and I came here and I did over here also. You can directly take 40 seconds and here you will get 0.86888888. You will get that answer here also. There is no doubt. There is no doubt. So a real costing genius will not write this. But this applies to people who are doing CA or Indian CWA. Americans don't expect you to do that. Why? Because Americans are very, very conservative with their academics. They keep it simple. They focus more on the concepts. So in this, you tell me one thing. Was this more of like a high school sum? Or was this more of like some international exam and my God, this is going to be very difficult kind of sum? A simple bloody high school sum here. A simple bloody high school sum. 70% of your stuff is simple bloody high school sums. You don't have to worry about it. You don't have to worry about it. Are you with me on that? Yes or no? Yes or no?
Yes, sir.
Good. Good. Now, what we touched on today? We did normal. We did standard. We did actual. What did we do? Normal, standard, actual. Please pay attention. Hey, screenshot marna bhai. Hey bhai, screenshot maro. Done. Chal, thank you. What we did? We did standard, normal, actual. Standard is actual units multiplied by standard hours per unit multiplied by standard rate per hour. If you notice, this is nothing but a flexible budget. This is actual hours multiplied by standard rate, and this is actual hours multiplied by actual rate. I need you to keep this in mind. Under normal and actual, direct labor are equal. Why? Because both use actual basis. So direct material will be what? Actual quantity multiplied by actual price. Direct labor will be what? Actual hour multiplied by actual rate. Clear? 100%? Okay. For overheads, I have written it over here. Actual hours multiplied by standard rate. This is for your overheads. This is again for your overheads. This was the first thing that you did. Second thing that you did was absorption versus marginal. And the third thing that you did as a question was a few theory aspects in this chapter. Right? That is what we have done or covered today. Are you with me on that? I'm losing guys over here. It seems they are conking off to sleep. So I'm going to stop recording here for today and we'll continue tomorrow. Tomorrow we continue with this chapter. Our objective for tomorrow has to be to do somewhere around, I would like to say 25 to 30 MCQs. Is that a reasonable guess or a reasonable number to put?
Yes, sir.